So we're calling the meeting back to order. Good morning, and welcome to the Standing Committee on Government Operations, Public Review of the Government of the Northwest Territories Public Accounts 2018-2019. I'd first like to acknowledge all members of the public and media who have joined us today. Welcome. We have with us the Government of the Northwest Territories Office of the Comptroller General, Ms. Julie Muchin, and her staff. They joined us to answer the committee's questions on the public accounts for 2018-2019. We also have with us today the Auditor General of Canada, Ms. Karen Hogan, and staff from the Office of the Auditor General's office in Edmonton. I will now ask everyone to please introduce themselves for the record. We will start with the Office of the Auditor General.
Thank you, Madam Chair. My name is David Irving, and I'm the principal responsible for the audit. I just wanted to let you know that Karen Hogan, who's the Auditor General, and Kelsey Hogg, who's the Director, are both in the lobby waiting to be admitted to the meeting.
We'll just make sure we put them on right now, please. Are they on there? Well, we want to do it in order.
Yes, I can see them now.
Okay. Ms. Hogan, do you want to introduce yourself, please?
Yes, thank you. Good morning. My name is Karen Hogan. I'm the Auditor General of Canada and the 3 territories. Thank you for having me here today.
And one more staff member, Kelsey?
Hello, my name is Kelsey Hogg, and I'm the Director in charge of the financial audit for the Consolidated Statements of the Government.
Thank you. So now I would have the introductions of the Office of the Comptroller General for the Northwest Territories Government.
Thank you, Madam Chair. My name is Julie Muchin, and I'm the Comptroller General for the Government of the Northwest Territories. And with me today is Ms. Siobhan Emilian, who's the Assistant Comptroller General. And on the phone, we have Ms. Taegwin Jones, who's the Assistant Director for Reporting, Reporting, Treasury, and Risk Management, and Mr. Walter Mupedziswa, who's the Manager of Financial Reporting for the Department of Finance. Thank you, Madam Chair.
Thank you. And now I will have the Standing Committee to introduce themselves, starting on my left.
Ron Montrose, MLA Decho.
Caitlin Cleveland, MLA Cam Lake.
Rylan Johnson, MLA for Yellowknife North.
Katrina Knockleby, MLA for Great Slave.
And I am Frida Marcellos, MLA for Tabacha and Chair of the Standing Committee on Government Operations. And with us we have today a couple of staff members.
My name is Cynthia James. I'm the committee clerk.
And I'm April Taylor, the committee advisor.
And online, I'd like to have our group online introduce themselves, starting with MLA O'Reilly.
Thanks, Madam Chair. Kevin O'Reilly, Frame Lake.
Mr. Noren.
Masicho, Madam Chair. Steve Noren, MLA for Tuna Willowdale.
Ms. Sembler.
Good afternoon. It's good morning. Lisa Semler, MLA for Nunavut Twin Lakes.
Is there anybody else online? No. Okay. The Standing Committee on Government Operations has a mandate to review the public accounts of the Government of the Northwest Territories. The purpose of today's public meeting is to review the Government of the Northwest Territories public accounts for 2018-2019. While this review would have normally taken place in May 2020, It was not possible at the time due to the COVID-19 pandemic. We are also meeting virtually for this reason. Examining the public accounts of the Government of the Northwest Territories is the responsibility of the Standing Committee on Government Operations, and one that is taken very seriously. The committee intends to continue the practice of holding a public review of the public accounts so that the Government of the Northwest Territories spending issues are publicly examined and all relevant information is placed before the public. I would encourage those of you who are interested in reviewing the public accounts to refer to the online versions which are available on the Legislative Assembly's website at www.government.gov.nt.ca and on the Department of Finance website at www.fin.gov.nt.ca. I will now invite the Comptroller General, Ms. Muchin, to proceed with any opening comments she wishes to make.
Good morning, and thank you for inviting us before committee to discuss the 2019 public accounts of the Government of the Northwest Territories. The public accounts represent one of the key accountability mechanisms of the GNWT. The public accounts present the financial position of the consolidated government reporting entity as at March 31, 2019, and the results of operations for fiscal year ended March 31, 2019. The public accounts provide a reader additional information through notes and disclosures and schedules. In addition to the financial statements, the public accounts provide information about key financial indicators on the general financial condition of the GNWT, including assessing whether the government met the requirements of the fiscal responsibility policy. The public accounts also include the non-consolidated financial statements of the GNWT, which presents the financial position and operating results of the GNWT departments and Legislative Assembly. The government reporting entity, which is presented in the consolidated public accounts, includes the core GNWT, all public agencies, and other controlled entities other than the Workers' Safety and Compensation Commission. The consolidated public accounts are audited by the Office of the Auditor General of Canada. The Auditor's report provides a positive, clean opinion, noting continued progress by the GNWT over prior years. The 2019 consolidated public accounts includes an operating surplus of $4 million, which is comprised of revenues of $2.04 billion and expenses of $2.03 billion. The annual surplus is used primarily for investment in capital infrastructure and paying down debt. During the year, the GNWT invested $280 million into capital infrastructure. The consolidated cash position decreased by $26 million to $110 million, and the GNWT has $334 million in short-term loans on March 31, 2019, which is an increase of $36 million over the prior year. Overall borrowing, as defined by the NWT Borrowing Act, was $996 million, which resulted in the government's residual borrowing capacity being $304 million at March 31, 2019. Noted in the public accounts this year are two restatements of the prior year related to the correction of revenue and expenses for revolving funds and a correction for the Stanton Renewal Capital Project to capitalize costs that had been previously excluded. The financial statement discussion and analysis portion of the public accounts summarizes the government's consolidated financial results as at March 31, 2019. Although the GNWT had an operating surplus, the GNWT does have limited flexibility to raise financial resources and has vulnerabilities related to revenue sources, which requires a need for careful fiscal management. That concludes my opening comments. At this time, if committee agrees, I would like to go through a short presentation to provide some detail on the financial highlights, as well as the government's actions towards the committee's recommendations from the review of the 2017-18 public accounts. Thank you.
Thank you, Ms. Mochin. Are there any questions to the public accounts? Pardon? Yeah. Yeah, you're going to go ahead with the presentation. Sorry.
Thank you.
My notes aren't just quite correct here.
Thank you, Madam Chair. On slide 2, what I'd like to walk you through today is an overview of the public accounts, financial highlights, some of the challenges, an update on recommendations previously made by this committee, as well as a short discussion on some upcoming changes to standards that we'd like to bring to your attention. Slide 4, a few items to highlight here in the overview. The public accounts are required to be prepared annually under the Financial Administration Act and the Northwest Territories Act. The year we are reporting on is from April 1st, 2018 to March 31, 2019. The GNWT follows Canadian GAAP as set by the Public Sector Accounting Board. The GNWT consolidated statements are audited annually by the Office of the Auditor General of Canada. Slide 5. There are 4 different sections that make up the public accounts. Section 1 is the financial position of the entire government entity, reporting entity, which includes departments, revolving funds, public agencies, territorial corporations, and other related entities. This section is audited by the OAG. Section 2 is the non-consolidated financial statements, which is comprised of GNWT departments and revolving funds only. These schedules have additional detail on the nature of revenues and expenses by department. In Section 3 and 4, in these sections, you can find the financial position and results for the education boards, health boards, public agencies, territorial corporations, and other related entities. On slide 6, for additional information on the public accounts, we have prepared a document titled The Public Accounts and Overview, and this is available on the Department of Finance website. 2018-19 GNWT public accounts timing. There are a number of key milestones for the public accounts each year. While the FAA requires that the interim financial report be completed by September 30th, we strive to complete and provide a copy to committee on or around August 31st. This is to ensure that committee has the information they require in time to assist with the review of business plans. As a result of committee dissolving on August 31st, 2019, the interim financial statements were not provided to committee. However, these are available on the Department of Finance website in Section 2 of the statements. In 2018-19, the statutory requirements for completing and publishing the consolidated public accounts were met. 2018-19 consolidated financial highlights. On this slide, slide 10, on this slide we have presented the key financial highlights from the 2018 consolidated statements and how they compare to the results from 2017-18. We will go into more detail on each of these in the next few slides. On slide 11, as you can see from the table, the 2018-19 consolidated financial statement reports an actual annual operating surplus of $4.13 million, which is $15.47 million higher than budgeted. The annual operating surplus is $157 million lower than the prior year. Revenues are higher than budget primarily due to higher transfer payments and more fuel delivery and sales, and they are lower than the previous year due to a decrease in corporate income tax and non-renewable resource revenue. Expenses are 1.6% higher than budget due to higher infrastructure expenses for utilities and amortization as a result of assets coming into service, in addition to higher marine transportation costs, which were as a result of more demand in services. Expenses are 5.3% higher than previous year as a result of higher infrastructure costs and health and social service expenses. These include higher utility and amortization costs due to additional capital assets coming into service, and higher MTS costs due to additional service demand and higher NT hydro expenses. Additionally, there was an onboarding of the new Stanton Territorial Hospital and collective agreement increases, as well as other health and social service program spend increases. On slide 12, financial assets decreased to $487 million from $525 million the previous year. Decreased cash and accounts receivable at year-end accounted for most of the overall decrease. Liabilities increased to $1.61 billion from $1.52 billion, and the most notable changes were an increase in liabilities under public-private partnerships for work done on the Stanton Territorial Hospital renewal and the Clecho all-season road projects, and an increase in short-term borrowing. The most significant GNWT liabilities are for long-term debt at $396 million, short-term loans of $334 million, liabilities under public-private partnerships of $236 million, and accounts payable and accrued liabilities of $313 million. On slide 13, non-financial assets are primarily made up of tangible capital assets of $3.45 billion that are used to provide services to the public. Schedule A of the Public Accounts Section 1 provides a summary of tangible capital assets. A total of $280 million was spent on the acquisition of tangible capital assets during 2018-19. The bulk of this investment was made in roads and bridges and the Stanton Territorial Hospital. The government is in a net debt position of $1.12 billion. Net debt increased by $129 million during the fiscal year, primarily due to debt that was incurred to finance public-private partnership liabilities and an increase in short-term borrowing. 2018-19 public accounts challenges. The audit of the consolidated public accounts is complex. Work on the fiscal year begins prior to March 31 and continues over 6 months after March 31 in any given year. The completion of the public accounts includes the consolidation of financial statements and entries for G&WT departments, 23 entities, revolving funds, and special purpose funds. Challenges during the year can largely be around the availability of resources and timing of information. Public agencies can be challenged at times to have their audits and annual reports completed within the legislated timeframes. The Department of Finance provides supports to public agencies throughout the year, including advice provided on legislation and policies, direction and support provided on year-end instruction and processes, and relevant information updates are shared as required. 2017-18 recommendations. There were 3 recommendations that were made by committee in the last assembly pertaining to the review of the 2017-18 public accounts. We will review these in more detail in the next few slides, and my team and I are committed to working with committee on addressing concerns and recommendations. Recommendation number 1 was to prepare a consolidated budget for the government reporting entity. A budget that shows anticipated revenue and expenditure for the larger government reporting entity. This recommendation has been completed. The Department of Finance tabled its first consolidated budget in November of 2020, and it will be prepared annually going forward. Recommendation number 2 was to undertake an analysis of best practices with respect to financial reporting. Our initial review did not identify any gaps in disclosure. However, this review notes that most jurisdictions have approved consolidated budgets, which the G&WT has now completed. And we will continue to focus our efforts in this area and report back to committee on our progress. Recommendation number 3 was to share with committee a draft of our new platform for disclosing environmental liabilities. A link to this tool in draft form has been provided to committee, and we're looking forward to hearing your feedback. G&WT Public Accounts Future Standard Changes. PS 3280, Asset Retirement Obligations, is a future standard change that we wanted to bring to your attention. Although it is not effective until 22-23, we anticipate it will have a significant impact on the G&WT, and we are currently working through that assessment. And once we have more information, we'll provide it to committee at the appropriate time. And this standard refers to the legal obligation associated with the retirement of a tangible capital asset. Costs that would be in scope would include solid waste landfill closure and post-closure liabilities, removal of asbestos, and retirement of hospital equipment such as X-ray machines. And you might ask what the difference between an asset retirement obligation and an environmental liability is. An environmental liability is an obligation to remove or remediate pollution or contaminants from environmental media, such as soil, groundwater, sediment, and surface water, and where the contamination exceeds an environmental standard. An asset retirement obligation arises from the acquisition, construction, development, or normal operation of a long-lived asset. Asset retirement costs increase the carrying amount of the related tangible capital asset and are expensed in a rational and systematic manner. Asset retirement costs associated with an asset no longer in production use are expensed. Measurement of a liability for an asset retirement obligation should result in the best estimate of the amount required to retire a tangible capital asset at the financial statement date. And the Department of Finance is currently assessing the impact of this new standard on the government financial statements. Thank you for your time. That concludes my presentation.
Thank you, Ms. Mochin. We're going to go back to the order that we should have went into, and that's we'll have the opening remarks of our Auditor General of Canada for Ms. Hogan and the presentation. Thank you. Ms. Hogan, please.
Thank you, Madam Chair. Thank you for this opportunity to appear publicly for the first time to discuss our audit of the consolidated financial statements of the Government of Northwest Territories. With me are David Irving, the principal who is responsible for the financial audit, and Kelsey Hogg, who is the financial audit director. We are appearing before you today for the 2018-2019 public accounts, and we look forward to appearing before you later this year for the 2019-2020 public accounts. The committee's review of the public accounts is an important step in ensuring accountability for how public funds are spent and how government finances are reported. The 2018-2019 public accounts, which includes the government's consolidated financial statements, were tabled in the Legislative Assembly on December 10th, 2019. Our primary responsibility as the auditor for the Government of Northwest Territories is to form and express an opinion on the consolidated financial statements. Our work adds value by supporting the oversight role of elected officials and by promoting transparency and encouraging good financial management in government. The government carries out its accounting and financial reporting responsibilities through its Office of the Comptroller General, which is within the Department of Finance. The Comptroller General will answer questions about the preparation of the consolidated financial statements. We will focus on our audit. Our independent auditor's report is on pages 9 to 12 in Part 1 of the public accounts. We assess the consolidated financial statements against Canadian public sector accounting standards. We found that the statements conformed in all material respects, and we issued an unmodified or clean audit opinion. This means that the information in the statements is reliable. Our audit noted 2 observations which highlight the importance of good financial reporting. First, the presentation of the government's public-private partnership infrastructure projects and its associated debts. And second, the consolidation in the financial statements of the several entities that government controls. I will now briefly address both these matters. Governments are increasingly using public-private partnerships to deliver infrastructure projects. A government can use these partnerships as a way to manage costs and to benefit from private sector expertise. It is therefore important to have accurate reporting of costs for informed decision-making. Public-private partnerships are usually large and complex. During our audit, we reviewed the reporting of costs for all public-private partnerships and found that the costs were recorded accurately with one exception. Correcting this exception resulted in a $30 million increase of both tangible capital assets and liabilities presented in the 2017-18 financial statements. We are satisfied that the adjustments more accurately reflect the costs of the project to date. Let's now turn to our second observation. When preparing its financial statements, the government consolidates all of the entities it controls, including revolving funds. Our audit found that certain revolving funds revenues and expenses had been incorrectly netted. Showing revenues and expenses separately is required by accounting standards, and it provides a more accurate picture of government's operations. The correction resulted in an increase of $34 million in both the revenues and expenses presented in 2017-18. I would like to thank the Comptroller General, the Deputy Minister of Finance, and the staff of the departments and territorial corporations who were involved in preparing the government's consolidated financial statements. We appreciate the effort, cooperation, and help of all involved. Madam Chair, this concludes my opening remarks, and we'd be pleased to take the committee's questions. Thank you.
So we're going to start the questions beginning with the Office for the Auditor General. Okay, so MLA Bonitrush.
Merci, Madam Chair. I'd like to thank the Office of the Auditor General and the Comptroller General for the Northwest Territories. My question is in relation to the Office of the Auditor General's opening statements, specifically item number 9, having to deal with the revolving funds. In there, you've been stating that revenues and expenses have been incorrectly stated. I could be wrong on that one because you're using the word netted. And that showing revenues and expenses are to be separately reported. So you're finding something abnormal there in that picture. Also, you're stating that the correction resulted in an increase of $34 million in both the revenues and expenses presented in 2017, 2018. I'm wondering if you can just explain that for the public. Merci.
Thank you, MLA Bonnet-Rouge. Office of the Auditor General, Ms. Hogan, please.
Thank you. So when we talk about netting two items in the financial statements, what you typically would see is you would have revenues, which is money in on one line, and expenses, which is money out on the other line, which gives you a clear picture of how much revenue the government is bringing in and then how much they're spending on the other side. When they were netted, the two of them showed up on the same line. And so what it did was understate both the revenues and the expenses. So all that was done was to break those back out. So it wasn't an error in that revenues were forgotten or expenses were forgotten. It was just the way they were presented. And when you net them, you don't get the full picture. So when you separate them out, you're able to see full revenues and full expenses.
Thank you. No supplementary?
Probably a short one. I'm just wondering if you make any comments or observations on expenditures in any departments or stuff in the revolving funds. Whether you make those observations and comments back to the GNWT. Merci.
Thank you, MLA Bonnet-Rouge. Ms. Hogan?
Thank you. Of course, anytime that we find what we think might be a discrepancy or an error in how a transaction was recorded, or in this case, how a transaction is reported in the financial statements, we have that discussion with the Comptroller General. And in this instance, what you saw was that they agreed with us and that the financial statements were corrected so that the information could be better presented.
Thank you. MLA Cleveland.
Thank you very much, Madam Chair. Madam Chair, my questions are in regards to kind of the same section, so I'll stay in line with that. I'm happy that the errors were caught and that they were able to be fixed in the following year, but I'm wondering what changes occurred to the process from the Auditor General or from the GNWT to ensure that this doesn't happen in future accounts. Thank you.
Thank you, MLA Cleveland. Auditor General's office.
Thank you. I will ask David to expand on this question, but anytime we do find an opportunity to improve financial reporting or financial recording of transactions, we always take that self-respective look and look at whether our procedures need to be adjusted or whether the Comptroller General's need to be adjusted, and we talk that through so that we can ensure that this doesn't happen again in the future. But with that, I'll hand over to David to talk a little bit more about this particular instance. David?
Mr. Irving?
Thank you, Claire. No, in this instance, it was interesting. There were two new revolving funds, and working with the Comptroller General in the following year, although we were able to audit in the initial year that all the revenues and expenses were recorded in separate accounts, as Karen mentioned, there was an oversight, and both the revenue expenses for those two new revolving funds were actually grouped together in the financial statements, Whereas when you take a look at the other revolving funds, all those revenues and expenses are properly separated. So as part of the process that was discovered in the following year, we worked with the Comptroller General to ensure that the correct groupings did occur in the consolidated financial statements. Thank you.
Supplementary, MLA Cleveland.
Thank you very much, Madam Chair. Madam Chair, my next question is just in regards to kind of our tolerance for error. And with any kind of accounting, there will obviously be some human error that occurs, but I'm just wondering from a jurisdictional scan kind of point of view, what the tolerance for error is within the GNWT versus other jurisdictions, and what's realistic for us to expect as far as a margin of error within our accounting, given that there is room for human error, but then also staying accountable to the fact that these are public funds and that we need to ensure that they're available to be spent responsibly for the people of the Northwest Territories. Thank you.
Thank you, MLA Cleveland. Mr. Irving?
Perhaps I can handle that. I don't know if David's having an issue there with his his mic. So I think the tolerance for error that the government has is a question better posed to the Comptroller General. When we do an audit, however, we do set a tolerance for errors. We base that on what we believe our users' needs and what type of error in a given financial statement line item might influence their decision making when looking at the whole of government financial statements, not just at individual transactions. We do use that threshold to help us decide on how best to sample and where to test and what to do. But with respect to the tolerance of error for the government itself, I do believe it's the Comptroller General that could better answer that question.
Okay, so we'll do that in the next section. MLA Johnson?
Thank you, Madam Chair, and thank you to Auditor General for presenting today. I want to, can I get a I understand that for the consolidating all of these audits, that the Auditor General's office actually audited the Power Corp and the Housing Corp annual statements that then would have gone into this public accounts, but can I get a sense of which organizations the Auditor General's office audits for the GNWT and some of the reasoning of why those ones are selected? Thank you, Madam Chair.
Thank you, MLA Johnson. Auditor General?
I think to give you the laundry list of all those entities, I will ask David to join in there, and he can provide you with a more fulsome answer. I'd be remiss and would be worried if I forgot some of them. David?
Thanks, Karen. Simply put, we audit the Northwest Territories Housing Corporation, Northwest Territories Power Corporation, which is consolidated in the Northwest Territories Hydro Corporation. We also audit the Northwest Territories Health and Social Services Authority, and those are three very significant components of the government's consolidated financial statements. In addition, we also audit the Aurora College and the Northwest Territories Business Development Investment Corporation. Those are also consolidated, but they're not considered to be significant components. And when we're taking a look at how we are appointed as auditor there, that is a result of either our appointment in the Financial Administration Act or in those specific entities, corporation acts, if you will. Now, in addition to all those entities, we also audit the Workers' Safety Compensation Commission of the Northwest Territories and Nunavut. Now, that is not consolidated in the government accounts, but it is another audit that we do in the Northwest Territories. Thank you.
Supplementary, MLA Johnson?
Yeah, thank you, Madam Chair. I guess one of my goals is to perhaps try and see the public accounts a little earlier. Speaking earlier, we generally aim to get them about mid-October, but I think in some jurisdictions that can be sped up, by a couple months. And I recognize one of the challenges is that we take the Housing Corp, for example, it has a bunch of local housing authorities that have to be wrapped up, and the BDIC has a bunch of subsidiaries that have to be consolidated. And so those audits have to be completed. But I'm just curious if there's any efforts in the Office of the Auditor General to kind of streamline the series of audits that have to come that could probably maybe result in the public accounts coming a little sooner. Thank you, Madam Chair.
Thank you, Emily Johnson. Mr. Irving?
Thank you, Madam Chair. No, it's an excellent question. I know we've been working with the Comptroller General over the years to try and move this process sooner, because you're quite right. Having timely information is important. Now, as you mentioned, one of the complicating factors is the Government of Northwest Territories does consolidate 23 different organizations. And included in those organizations, as you mentioned, are certain organizations that consolidate several other entities. So part of the issue with this is trying to ensure that those entities that the government's consolidating can be completed sooner to allow the government time to complete the consolidation. So that has been an ongoing process. So it has moved up over the years. Right now, mid-October is the goal. And in order to move it earlier than that, we really need to see those other corporation audits being completed sooner. So I will allow the Comptroller General to also provide their perspective, because there's the one doing the detailed complex consolidations. Thank you.
Are there any other questions from members, my colleagues, for the Auditor General's office? MLA O'Reilly?
Thanks, Madam Chair. Can we get the Auditor General's office to discuss the concept of materiality a little bit further? What the actual limit was for the purposes of this audit, and yes, some of the aspects of that, because it's not used. If something sort of was off below that amount, it doesn't necessarily mean that they're not going to notice it or report it in some way. I just think it would be helpful to have that on the record for the public. Thanks, Madam Chair.
Thank you, MLA O'Reilly. Mr. Irving?
Thank you, Madam Chair. No, the question of materiality is a very interesting one, and depending on which jurisdiction, you'll see a wide range of amounts used. So we've decided, as part of this audit, that materiality would be based on expenses. And as part of that calculation, we took a look, and the amount used was 3%. So that worked out to be $57 million. Now, it's important to understand when we're talking about materiality, there's a quantitative measure and a qualitative measure. When we're talking about the qualitative measure, we take a look at several other issues that might be a premise. So if there's an error related to fraud, fraud is of high concern, so you wouldn't be using such a high threshold with fraud. In addition, any errors that could swing a surplus to a deficit position are deemed to be quite significant, and we'll look at those at lower levels. Now, it's also important to mention that when you're just talking about what is the total quantitative measure of materiality, that's when we take a look at whether or not we need to qualify the financial statements. As MLA O'Reilly mentioned, we do look at amounts significantly below that. So any amounts over $2,850,000, we're keeping a running total of those, discussing those with the Comptroller General as to these are the errors we found, these are the things we think you need to correct. But is there anything you would like to add further on that, Karen?
Oh, thank you, David. I guess I would just add a little bit of basic concept of what materiality is in the context of an audit. And so we set, as every auditor would do, looking at an individual set of financial statements, the amount that we think would influence a user's decisions. We also use that amount to help drive our testing threshold. So there are some financial statement line items that are significantly below or above the materiality item. And we use it to test so that we can test in every area. An audit does not look at every single transaction, but we do need a way in order to determine which transactions to look at. And so there are absolutely transactions that we will look at that are much, much well below that threshold. That threshold is really when you sit back and look at the whole set of statements. You would think that anytime errors accumulate to that amount, they would impact your decision, and hence you would want the statements fixed. So it isn't just a dollar number. It's a number that drives a lot of our testing, a lot of our discussions, a lot of our examination. So I just wanted to give that assurance about how it's used in the context of an audit, not just as a dollar figure.
Thank you. Supplementary, MLA O'Reilly.
Yeah, thanks. I really appreciate the response from our colleagues at the Office of the Auditor General. I'd like to ask, our government, other governments tend to be using P3s or public-private partnerships a lot more. As I understand it, there are still no accounting standards that have been widely accepted for how these are accounted for and presented in financial statements. I think our committee in the past has made some progress, and our Comptroller General as well, in terms of trying to report these better. But can you tell us a little bit more about what you folks are looking for in terms of P3s in the financial statements, and how the profession is moving, and whether we've got sort of best practices here from what you've seen in our financial statements or in the public accounts. Thanks, Madam Chair.
So
Thank you,
MLA O'Reilly. So Office of the Auditor General, who wants to answer that?
I'll take that question. Thank you. So you are correct. There is a new standard that is being developed, and until that further guidance is provided, there are some basic concepts related to contracts and tangible capital assets that apply, right? So you want to make sure that you're accounting for your tangible capital asset as you develop it over its lifetime, and you're recording your assets and liabilities in an accurate way. So right now, that's absolutely what's happening. You want to see financial statement disclosure providing useful information to continue telling the story that the numbers tell on the financial statements. And that's happening in the Northwest Territories financial statements. The new standard will just see that being more codified so that it's comparable across different jurisdictions, and we'll likely see an increase in some of the information that needs to be disclosed. So while a standard is being developed and is imminent, the financial statements still contain a lot of the important information that you need as users and decision makers when you look at them.
Thank you for that. MLA Johnson.
Thank you, Madam Chair. I'd also like to just get a little bit more information of how P3 reporting was put in this. I know there was a restatement for the Stanton Territorial Hospital project, and that was essentially due to what year some certain construction costs should be placed in. But can I get a sense of when we build a P3 building like that, does it get added to the tangible capital assets, and how does the contractual obligations fit into this specific audit? I just, when I look through and try to get a sense of, the total liability under the P3 contracts that we have in this year's audit, I struggle to find it. So can I just get an explanation of how that relates to contractual obligations in relation to the actual value of the asset? Thank you, Madam Chair.
Thank you, MLA Johnson. Office of the Auditor General.
So I'll start, and then I will hand that over to David Irving to talk a little bit about the contractual obligations. When a P3 arrangement, a public-private partnership, like any other tangible capital asset, as you construct it, should be reflected on your financial statements throughout the construction phase. The complexity here is that you have a third party who is doing the construction and maintaining the accounting records, and so you do need to have a really good collaborative and constant communication between the government and the private enterprise, so that you're staying on top of when the costs are incurred and recording them in the most accurate period. As you can appreciate, these contracts are long and complex, and there is a lot of nuances, and that's where you do have to worry about not only the liabilities, the assets, but the contractual obligations as well. So I think I'll ask David to maybe add how those might appear in the financial statements for Northwest Territories. David?
Thank you, Karen. This is an excellent question. It's really good to understand how these processes work. So as those P3 projects are that construction work's being done, that's when you see the tangible capital asset appearing on the financial statements. And the associated P3 liability also shows up at the same time. Now, in addition, as part of P3s, there's traditionally a component that's signed for the operational and capital commitments. So as a result, if you take a look, and Note 12 will talk to you about the liabilities under private partnerships. So they'll help you see the debt. So when you take a look under the commitments, there's separate commitments for both the capital commitments and the operation and maintenance commitments. So that's in a separate note. Any further questions on this?
Supplementary, MLA Johnson?
Yeah, thank you, Madam Chair. I guess my other question is, so the operation and maintenance for a single year is reflected. But take Stanton, for example. After 5 years, the contractor is allowed to come back and essentially do a test the operation and maintenance against real world costs, and I suspect they will do that, and then the operation and maintenance will go up. If that occurs, will that just simply be reflected in that year's financial audits, or is that kind of contingent ability to change the contract reflected anywhere? Thank you, Madam Chair.
Thank you, MLA Johnson. Mr. Irving?
Thank you, Madam Chair. If you were to take a look at your Note 16 on the contractual obligations and rights, you would see all the operational payments from the signed agreements for the next 5 years, all listed out, including the total. Right? So it doesn't just show up on a one-year basis. In addition, the tangible capital asset construction P3 commitments that have been made also show up in that note as a separate line, so you can see the next year's and the next following year's capital commitments from that perspective. Now, with regards to your question on, yes, they signed an agreement and there's certain commitments that have been made, and if it will be reassessed in 5 years, then once that new amount is made, then that would be reflected in the financial statements in that year, and the estimates for the future years would then be updated. But until any of those figures have been renegotiated or changed, you go with the original legal signed contract, if you will. That helps.
Thank you, Mr. Irving. We're going to go now into the Comptroller General's presentation, and are there any questions for the Comptroller General? MLA Nokelby.
Thank you, Madam Chair. Madam Chair, my question is back to the question around materiality, and it's our understanding if we're using a 1.5% to 3% range at times, that number can be anywhere from 25 million to 50 million. I would just like to ask the Department of Finance or the Comptroller if she could explain what the GNWT uses and how they control that sort of margin of error such that we're not coming to those thresholds, because as we all know that $30 to $50 million could be better used elsewhere in the GNWT. Thank you.
Ms. Mochin?
Thank you, Madam Chair. So when we're starting out our year-end process, we actually don't have a materiality limit. We want to hear about any adjustment from any department or entity. And then as we move through the audit process, materiality will go up to something like $75,000 and then $400,000, depending on where we're at in the audit process. But at the very beginning, we work, best efforts with all entities and departments to ensure all adjustments are brought forward, regardless of the amount that they may be. Thank you, Madam Chair.
Thank you. MLA Nokelby, supplementary.
Thank you, Madam Chair. I'm really glad to hear that, and I'm going to ask a very, very easy question. Could you please define GAAP that you mentioned in your presentation for the public? Thank you.
Ms. Mochin.
Thank you, Madam Chair. I'm going to ask Ms. Emilian to answer that one. Thank you.
So GAAP, generally accepted accounting principles. Any audit or any is governed by a set of accounting principles, and we are governed by the Public Sector Accounting Board principles there.
MLA Cleveland.
Thank you very much, Madam Chair. And I believe that Emily Knockleby has given me a great entrance into the same topic. My question again, and I had asked it to the OAG before, is just in regards to our government's tolerance for errors within accounting. And I'm wondering what the thresholds are for that and what consequences or what processes the GNWT has in place to mitigate their tolerance for errors. Thank you.
Ms. Mochin. Thank you, MLA Cleveland.
Thank you, Madam Chair. So we do define materiality in our year-end process and in our year-end manuals. We go over our year-end processes and information with departments and entities. We work very closely providing advice if there's any changes in policies or legislation with these entities and departments. And we provide, training in that aspect. So we work pretty closely to, ensure that there's open dialogue. We have, templates developed and things like that to minimize any kind of confusion or things like that. So quite a process, complex, but with a lot of cooperation from different government departments and entities in that process. Thank you, Madam Chair.
Thank you. MLA Cleveland, your supplementary.
Thank you very much, Madam Chair. Madam Chair, within our documents, the GNWT stated that the government's non-consolidated infrastructure investments, excluding P3 projects, are 52% of operating surpluses generated within the non-consolidated public accounts, which is greater than the 50% requirement. And that relates to our fiscal or the GNWT's fiscal responsibility policy. I'm wondering if the Comptroller General can speak a little bit in more detail to what this actually means. And if we spent 52% on our operating surplus, how much did we actually spend, or the GNWT actually spend, on government or from government debt on infrastructure investments? Thank you.
Thank you, MLA Cleveland. Ms. Mochin.
Thank you, Madam Chair. Yeah, so this policy is that we must use at least 50% of our operating surpluses. And so it's basically trying to say we're minimizing the amount we're borrowing and we're staying on a sustainable path. And so we borrowed less than 50% of the operating cash available for infrastructure investments. And that's what this measure is really trying to measure and to show compliance against the fiscal responsibility policy. Thank you, Madam Chair.
MLA Johnson.
Thank you, Madam Chair. I guess when I look at the 2018-19 reports, it's very much a typical GNWT budget. We added $129 million of debt, and I see that $1.12 billion worth of debt here, and I'm nostalgic. I wish we still had that figure. And then I look, and it's clear the reason for that debt, half of it was, or the vast majority was for infrastructure, and we paid for half of that infrastructure with, debt, because that's the max we could do. And then the rest of it we built with P3s, which is just, to me, another form of debt in the contractual obligations. And then since we built all those assets, a bunch more amortization was added to kind of remove any of our, future spending abilities. And I recognize that those are political decisions, and this budget was approved by the last assembly. But I question, when we say this is in compliance with fiscal responsibility, whether it actually is fiscally responsible. And I think the biggest driver there is we seem determined every year to build half of our infrastructure with debt, and then we reach that cap and build the rest with P3s. And I would like to see our fiscal responsibility policy actually try and cap our ability to, max out infrastructure spending with debt and then switch to P3s once we've done that. And I know there's a cap on overall debt servicing, but I'm wondering, with new P3 public accounting standards coming online, if the Comptroller General has any advice on how we could make sure that, the infrastructure spending of this 50% cap doesn't just get maxed out and then switch to P3s. Is there a way that we could, as committee, recommend the P3 spending and contractual obligations actually also somewhat get built into a debt cap? Thank you, Madam Chair.
Thank you, MLA Johnson. Ms. Mochin?
Thank you, Madam Chair. P3 is removed from the calculation on the basis that they have their own financing, and so that's why they're excluded from the calculation. In terms of the overall fiscal responsibility policy, what I'm presenting here today is how the policy is currently defined, and I would have to take back to the department any comments from this committee on that. Thank you, Madam Chair.
Thank you. Supplementary, MLA Johnson?
Yeah, thank you, Madam Chair. Yeah, perhaps I could just, for the public's knowledge, and I recognize that, the Comptroller General is not in charge of the fiscal responsibility policy, but if the Comptroller General could just speak to where her authority lies and the independence of this office and kind of that relationship of when I should be asking, I would like changes to the fiscal responsibility policy, where the line between Financial Management Board Secretariat is and the Comptroller General's office. I sometimes get confused on, who exactly is in charge of making sure we're in compliance with the fiscal responsibility policy. Thank you, Madam Chair.
Thank you, MLA Johnson. Ms. Mochin?
Thank you, Madam Chair. That's a great question. The Comptroller General's office is responsible for ensuring the accuracy of the public accounts, that the systems, the financial systems that support the compilation of the public accounts, that the internal controls are there around the composition of the actuals. And then what happens is that these actuals are then taken and incorporated into the overall government's fiscal framework and forward-looking outlook. And really in the Department of Finance, that sits within the Management Board Secretariat. And so that's really where the division, if you will, of duties, is split. Thank you, Madam Chair.
Thank you. Are there any questions online? Okay, so there's no more questions?
No, I have a question, Madam Chair.
Okay. MLA O'Reilly?
Thanks, Madam Chair. I guess I'd like to ask the Comptroller General, what were the lessons learned from the restatements? We had to, for P3s and the revolving funds, and those are areas that our government has decided to get more into. We've got more revolving funds, more P3s on the go. What were the lessons learned from the restatements? Thanks, Madam Chair.
Thank you, MLA O'Reilly. Ms. Mochin?
Thank you, Madam Chair. Yeah, so in this process, certainly with the revolving funds, it was the way they were being mapped, and so that has been corrected. They were new revolving funds, and that was the first year of reporting for them. So that was corrected, and processes update on those. And then in terms of the P3, I think we've got some internal processes that we have looked at, and we have made more robust in that area. That should avoid something similar happening in the future. Thank you, Madam Chair.
Thank you. Supplementary, MLA O'Reilly?
Yeah, thanks, Madam Chair. I want to turn to environmental liabilities, and I could ask a lot of questions here, but I see that there were 3 sites closed in the that period of time, and I'm wondering where the public can find out what those sites are and what was actually done there. And then secondly, I guess we've got 78 other sites where no liability has been recognized, but clearly somebody's got to go out and look at these sites at some point, check on them once in a while, see if they are if there is a problem there. Wouldn't we want to record some kind of contingent liability to even do that in inspection monitoring work that might be required? Thanks, Madam Chair.
Thank you, Mr. O'Reilly. Ms. Milchin.
Thank you, Madam Chair. There's a set process in terms of how to record and when to record liabilities, and we have internal processes and accounting standards that define that. And so that's what these numbers represent is on an annual basis. There is a committee that the Department of Finance chairs. A number of departments sit on that committee. Reviewing the listings. These listings sit with departments. They're updated so that we can ensure our liability at year end is the most accurate. And so there's sort of a set criteria for how to and when to record these particular liabilities. Thank you, Madam Chair.
Thank you, Ms. Milchin. MLA Norn.
Masi Cho, Madam Chair. I just had a question here, and I'm looking at key financial indicators for the consolidated financial highlights, and we're talking about liabilities and net debt. In the future reports, whatnot, I want to see, just for, I guess, for the public's purposes too as well, there was bonds taken out in with the GMT for an amount of 180 million. Where would bonds like this show up in these key financial indicators? Thank you.
Thank you, MLA Norn. Ms. Milchin.
Thank you, Madam Chair. Just for clarification, is the member referring to the long-term debt that's noted in Note 11 of Section 1? Thank you, Madam Chair.
MLA Norn, could you just identify and for clarity?
Yeah, so I don't, like I said, I want to try to keep the scope of this, but I'm just saying for the future, and just for, like, it's an education piece, where would things like bonds show up in future reports such as these? Thank you.
Ms. Milchin.
Thank you, Madam Chair. Yes, so in the future statements that would show up in the long-term debt, and that amount would be included in Note 11. Thank you, Madam Chair.
Thank you. Supplementary, MLA Norn?
Yeah, Masi Cho, Madam Chair. Just another quick question. Again, it's being a layperson for these type of things, and in terms of net debt, and I looked this up a while ago here. Why is it reported like this and not say total debt? Is there a reason why it's reported the way it's reported? Thank you.
Thank you, MLA Norn. Ms. Milchin?
Thank you, Madam Chair. Yep. So the way the statement of financial position is laid out is that the financial assets are considered for paying future liabilities. The liabilities section is existing obligations for past transactions. That gives you the net debt. So the difference between the liabilities and the financial assets give you your net debt. And then below that line are your non-financial assets, which is where you're going to find your tangible capital assets. And these are the assets that are providing the future services to the public. And then that will give you your overall accumulated surplus. So that's sort of why it's laid out that way. Thank you, Madam Chair.
Okay. Are there any other questions for Ms. Mochin? Okay. We'll take one more. MLA Johnson.
Thank you, Madam Chair. So, CD Howe often gives a report called Show and Tell, rating the fiscality of Canada's senior governments. And the 2019 report looking at this, it gave us an F. And a lot of this is due to the inconsistency between when our public accounts and the accuracy of the budget. Quite often, and I know there was a few percent changes in revenues and operating surplus here, but a lot of the time there's an inconsistency in the actual main estimates budget line. For example, I think ECE spent about 5% of their travel budget this year, and 25% or 75% the year before, and even less the year before that. And for some reason, the base budget never changes. So the main estimates just consistently is inaccurate, and then that department shuffles the money around for another purpose. And when we pass our main estimates, we only see actuals that are 2 years behind. So we're always asking, what is the current spending? And I recognize there was an ask, and this committee now, or the office now provides that information, but it's definitely not in the level of detail in the main estimates. So I guess I would like the Comptroller General to speak to how, after we get these public accounts and we know the figures, do they then inform actually changing numbers in the main estimates? Because I think there's a disconnect between your office and the Auditor General giving us this information and then it actually informing what the Management Board Secretariat does with it. Thank you, Madam Chair.
Ms. Mochin?
Madam Chair, yeah, so we aim to provide the non-consolidated financial statements to committee by August 31st so that they do have that information. There are a number of schedules included in the non-consolidated statements that do break down departmental expenditures and revenue, including grants and contributions. But in addition to that, the actual results for the year are incorporated into the fiscal framework that Management Board Secretariat prepares. So those numbers, are included in that process. Thank you, Madam Chair.
Thank you. Do you have a supplementary?
Yeah, thank you, Madam Chair. I guess I'll give an example. We're reviewing the main estimates. A lot of the revenue projections in there they're just inaccurate because we haven't adjusted for the reality of the corporate income taxes are going to be much lower, the royalties are going to be much lower. COVID obviously messed up a lot of this, but so then we go and pass main estimates where, for whatever reason in the process, there wasn't a catch up in time to adjust what the figures would be, and I quite expect that when I actually see this year's financial statements, it will show that. It'll show that, the GNWT was quite off in their projections for revenue. And I get this is a bit of a timing issue. It's back to that issue of why I would like to see all of the statements a little quicker, how they feed into each other. But in an example like that, where we're passing main estimates where we know the revenue number is off, what role does the Comptroller General have in adjusting the main estimates? Thank you, Madam Chair.
Ms. Mochin?
Thank you, Madam Chair. My role is really around preparing the actual results for that process. Thank you, Madam Chair.
Thank you. So we'll have one more question from MLA O'Reilly.
Thanks, Madam Chair. I want to go to slide 22 in the presentation. This is the future standard changes, the asset retirement obligations. I'm just trying to understand this a little bit better, and there was an explanation given about how, I think this is we don't want to have our assets turn into contaminated sites, but does this bring forward the closure liabilities faster in terms of accounting, so that we're going to have more liabilities on the books sooner than we would have without the standard? Is this like hundreds of millions of dollars or what? Thanks, Madam Chair.
Ms. Mochin?
Thank you, Madam Chair. It will be a different liability than the environmental liability. They'll be separate. In terms of materiality, we're still working through that process. We're assessing it. We wanted to bring it to your attention today, but we will also include it in the next presentation because it will be effective in the 22-23 fiscal year. So we're currently still working through that process, assessing what the value of this is, but it will be a separate liability than the environmental liability. Thank you, Madam Chair.
Supplementary, MLA O'Reilly.
Thanks. I understand that this is more than just the environmental liability, and from the things you talked about, X-ray machines and asbestos and so on. I guess this is really about making sure that we have full cost accounting for all of our assets. Is that what this is about? Thanks, Madam Chair.
Thank you, MLA O'Reilly. Ms. Mochin?
Thank you, Madam Chair. This standard is really around what the legal obligation associated with the retirement of a tangible capital asset is, and it only applies to the legal obligation. So we're still working through that assessment on our assets and determining what that liability is. And when we have more information, we'll provide it to committee. Thank you, Madam Chair.
Thank you. Are there any other questions for the Comptroller General? I see none. So I want to thank the Office of the Auditor General and the Auditor General, Ms. Karen Hogan, for today. I'd like to thank the Comptroller General for taking part in this public meeting, Ms. Julie Mochin, and her and staff, and all my colleagues for taking part in this public meeting. Thank you so much, and we will now close the public meeting. Thank you so much.